Hello guys, welcome again to another video. My name is Rocky Calvin, and in this video, as promised previously, we're going to be talking about what's happening in Euro USD, and it's pretty much the same thing happening with gold and against US dollar. Remember, these things or these pairs, they're against the dollar. So when the dollar is going down, expect them to go higher, and literally that's what's happening here. When you take a look at the DXY or the dollar index, you'll find that the dollar has been going low, and when the dollar is going lower, Euro USD and GBP USD are supposed to be going higher as much as gold is also concerned. So over here we had like a break of structure, right? So you'd expect price to come back into probably. I think today we likely a gap is going to be created here. So price might want to tap into that gap for reversal Thursday, which is tomorrow, then continue higher. But also on the other hand, we also have some other gaps here. So first thing first, we had a displacement, very aggressive one, very bullish one yesterday, you see, above the Monday highs. So that's a good sign that you're likely going to be going higher. So we move into hourly time frame and we mark the HSLs, especially since we are bullish. Okay, remember what I told you guys about HSLs. So they're just hourly swing lows because we are bullish. If we were bearish, should be marking the hourly swing highs. Okay, so we have the first one here, which we know for yesterday. I don't think price select to come here, but here anything can happen. Apart from that one, I don't see any other one that is valid here. Nope, nope, nope. We don't have any. Let me see. We had something. Yes, we had one here, but it has already been purged, so it's invalid. This one here, it's invalid. We just purged it. So maybe let's wait for a new one to be formed, which I expect. Just the same thing with gold. Actually, it's so funny how what I expect with gold is exactly what I'm saying here. So you see, with this one, I'm expecting this candle not to tap the low of this newly created hourly candle of the previous hour. But if it does, it's still okay. Then we're going to be using that candle as the new has HSL. I don't know why I keep on misquoting this HSL with the SHS. It's supposed to be HSL. This okay. This kind of my quotation or like my terming of it, but it's not so far from ICT hourly swing low. Okay, so hourly swing low. I'm expecting this one to be a hourly swing low. So later on, I'd expect price to come and purge it because liquidity is being created here. There's people who are already buying right now. They're buying and they're putting their stop loss right here. So these are our target. This they're gonna lose money and you're gonna make money. That's how it goes because they don't understand how smart money works. They don't understand how how these things works. So some people already are in longs and they'll put their stop loss right here. Okay, so we're gonna purge them later on. After we purge them, that candle that purge them would like the next candle of hourly to close back in on the candle that purged liquidity. Now, once it closes back in, you're going to look for a bullish fair value gap either on 5 minutes or 15 minutes. I like 15 minutes more. Then we target all-time highs. Sorry, not all-time highs. I'm used to gold hitting all-time highs, and I'm a gold trader, so I'm thinking about all-time highs even on euro. Euro is not on all-time highs. Euro is still in within the range because when you take a look at previous days, previous years back, it had it way more higher than this. So that being said, that's what I expect with euro. And people were complaining. I remember about euro. I think it was last week. Yeah, it was last week. Last week I saw a lot of online trolls and online cries about euro. It dropping. Why was it dropping? I think it was about because of this. Yes, maybe no. Let me see. Let me go to daily. Maybe let's see why. What was happening? Hmm. Yeah, here we go. Where's last week? This 21st. I think it was this area. Yeah, this one here. Maybe last week, part one. You see, it has been going all down, right? And started going higher. And that being said, this was just a correctional move. But apart from being a correctional move, um, for people who are trading breakouts, maybe somebody would have let's see something like this. This is a breakout structure, so they were looking for sales, so maybe targeting this low. But unfortunately, if you understand the overall trend that this is just a correction because apparently There was a breakout structure as well of this trend here. You see this one. As much as price had not yet tapped here, you should not expect it to touch below here. It was not likely to happen. And maybe now, if you want to use a city concept in confidence with this, you would have just done something like this. Wait for price to come from maybe 0.75 or zero point 0.5 right there. You buy, put your stop loss here, then you target that high. That was what's supposed to be happening. That is now for swing trading, for people who don't want to, stay, stress of day trading. And apart from that, anything else that would have likely to be, of course, that this movement here, retracement was supposed to be happening because the 75%, or at least 0.5% of retracement. That's why you had this price had to come down here before it goes higher. Then now, if you wanted to buy it, you'd wait for now bullish gaps like this one here. Burn the second candle, stop loss right there, target above. And that's it on Euro USD. I don't usually trade forex pairs like Euro USD GBP. I trade commodities and like gold and indices, Nasdaq. Actually, it's been long since I checked on Nasdaq. Let's do some quick analysis on Nasdaq here, right here, before this video ends. US Tech. Let me work with forex.com. Okay. Hmm. Beautiful. So Nasdaq has been bullish. The US stock has been going high despite the dollar because last time I checked this was quite some time. So it's pretty much the same thing. Very bullish on Nasdaq as well. Very bullish. This is the target. I think we're gonna hit this target today. This 26 to 53, 26,000 to 53, no 257 actually. We're gonna hit this one today, and very bullish as you can see. We displaced aggressively yesterday. On my, I mean on yesterday candle in relationship to the Monday one. So that is Monday and Tuesday relationship. So we displaced above Monday highs aggressively, as you can see. That shows that we are very, very interested in highs, in these highs here and going higher. So after this, you move into 1 hour time frame, and this is what you do: mark the hourly swing lows because you're looking for buys. Like for example, this one. Let's see. Let's find another one. Beautiful. There's another beautiful one here. This one right there. And let's mark another one. Nasdaq seems sweet. Nasdaq looks beautiful. I like this. I'm even tempted to, step away from gold for today. But I'm gonna stick to my rules. I'm gonna stick to my rules. So you see what's happening with Nasdaq. You already know with the with higher time frames, we are bullish. And since we are bullish, we're looking forward for buys, and we're looking for possible liquidity points. So some people bought when price came into this gap, which is okay, it's good. But now the problem is that they don't understand the concept of time and price. So after buying here, some of them their stop loss is just below here. Some of them their stop loss they have adjusted already. They have their stop loss right here, and that is our target. That is what we want to destroy before you look for entry. So if you're in Nasdaq trade right now and you've put your stop loss below here, if you see this video right now, know that your stop loss is going to be our entry spot. So you either shape up or the market is going to shape you out. So these are the swing points that I'd like price to revisit. So, but I wouldn't like it to go lower than this because we have this swing point and we have another bullish gap here, which makes this one a very strong point because this 2 PD race is going to be defending price or protecting price from reaching this low. But yet anything can happen, especially today with the news that we have FOMC and Trump is also, I think, is supposed to give some speech and so on. So that makes it quite a challenge on putting all your effort in just one PD array. So once this one is taken, for example, maybe with this candle or maybe with the New York Open, once it is taken, I'd like the next candle after it has been taken to close back in with a bullish 5 minutes or 15 minutes fair value gap. Then we're going to be looking for buys targeting what? This PRS here. Even if this candle right now, this one here, takes this liquidity and closes back in. But now the only issue is that, especially with indices, that if you start trading before New York Open, you're gonna be likely setting up yourself for some serious problems. You have to understand the concept of time and price. Specific times, specific things happens, and that's where what you need to be aware of. But regardless, if this candle closes back in, no, I mean this candle take liquidity, the another candle does not take liquidity below this one, or takes liquidity below this one that took this liquidity, but closes back in, giving us some bullish fair value gaps. Those bullish fair value gaps, especially on 5 or 15 minutes, should be able to protect us even during New York opening from price going any lower. So you'd be looking for buys using those PDRAs. So that being it, and you're going to be targeting this 26, around 26 to 61 there. And that's it for NASDAQ, guys. I don't know. It's all the same thing. Even yesterday, if you were, let me show you guys. For example, yesterday, if you're looking for a setup, let's see here. We did not have an hourly swing low, which was valid over here, but we had some. Let me see. We had some. We had some. Let's see. Let's see. Let's see. I wanna take a look at this. No, we had some. Let's say this one here. Yes, we had some over here. And as you can see during the New York, this I'm very sure this is New York opening time with quite liquidity over there, and you see price was rejecting it. So after price rejecting it, you do not enter over here. You wait until this second candle, this one, close back in. Okay, and now after closing back in, as you can see, we had created a very bullish hourly fair value gap, and you'd have entered on this one just to close above, below that one. For example, it would have been like this. It's all the same thing, guys, both on Nasdaq, gold, and whatever. It's all the same thing. Stop loss would be around there, and you would be targeting now these highs over here, and this would have been something just like this, around 1 to 10 hour. If you took that trade from yesterday, and probably it's heading there, that would have been 1 to 10 hour. It's all the same thing. Okay, and maybe if you switch on 15 minutes time frame, let's see on 15 minutes time frame, let's see if this entry was way better. Actually, on 15 minutes time frame, the gap that we had was this one below here. Price never really came back to it because it respected the hourly. We did not have a gap here, but I mean on 15, but we had some on hourly time frame, and this shows you that hourly, high time frames are very powerful. Alternatively, there was another one of 5 minutes right here. You see, it's almost the same thing. Price came in there, tap liquidity, put your stop loss below there, and here you go. That being said, that's it for today, guys. Hope you guys enjoyed this one. Hope you guys are learning and making profits. Above all, let's try as much as possible to be disciplined, because this game without discipline, it's all waste of time. You can know everything. Trust me, you can know everything, like where market is going, what's going to happen. But if you lack the discipline, you're going to lose money still. So discipline is for keeping what you've earned, and of course, without a strategy, you'll be wasting your time as well. So that being said, I think I'm done for today, and see you in the next one.